Welcome to Trading the Close on this Thursday. I'm Toni Valliere with Verified Investing, and here's what's making headlines today. The number of Americans filing for unemployment remains unchanged at 217,000. Meanwhile, continuing claims went up to 1.9 million, higher than expected. The expected 1.8 million. Now, layoffs are at their highest level for any February since 2009. The U.S. international trade deficit widened 5.1% in January to $67.4 billion, the largest trade gap since April of last year. Shares of Kroger surge after the grocery chain reports better than expected earnings and says it remains committed to purchasing Albertsons despite pushback from regulators. Novo Nordisk shares jump 8% on promising weight loss trial results. President Biden will give his State of the Union address tonight and is expected to cover inflation and immigration. Well, we saw the markets reach all-time highs today, so let's get a check of where things stand right now, just minutes before the closing bell. A lot of green today. We've got the Dow up 134 points, 0.35%. The NASDAQ up 250 points, 1.56%. We've got the S&P 500 up 52 points, just over 1%. Oil is down slightly. We've got gold up over $10. We've got Bitcoin up over $1,600 at this time. Let's bring in Chief Market Strategist Gareth Soloway. What do you make of all this green today, this rebound?
Yeah, rebound. I mean, we're going to the jobs report tomorrow. That's obviously the big thing. We had Jerome Powell testifying again today, some other Fed speakers, and I think that's really what kick-started this rally today. So we opened higher and have just trended. This is the 10-minute chart, so it just shows you we stayed in a very tight range, but it was generally favoring the upside here throughout the course of the day. Just want to show this going into the jobs report tomorrow. If we flip over to the daily chart, this wedge pattern, again, you don't get much tighter than this. We've been covering this for now a really long time, and you can see again. So the question I have is tomorrow, is there news that's going to break us one way or the other? And I think that's going to be the exciting thing for investors. You could start a bigger move in one of these directions. Whether it's up or down, we'll find out. So that's going to be very important tomorrow. I think the market expectations are 198,000 jobs added tomorrow. So we'll see if that's where it is. I think the market would like a Goldilocks number, so it's kind of weak enough where the Fed can potentially, maybe still lower rates later this year, but obviously not so weak that it looks like a recession is in the cards, right? Now, just a couple other charts to really take a look at. We talked about some of these Fed officials talking a little more dovishly today. You can see, look at the drop in the daily dollar. 2 days in a row, big drop. That's one of the reasons why the markets have rebounded. The market loves a weak dollar, and the market also loves lower rates. And you can see, again, the daily chart of the rates, 10-year yield slowly moving down day after day here for the last 5 to 7 days. And that, again, is a positive for the markets. Lastly, I'll just mention a couple things. After hours today, watch Broadcom reporting earnings after the bell. This is one of the bigger semiconductor stocks, so this will be influential. It's still NVIDIA's show. So NVIDIA and the semis are keeping this market up. We know a lot of the Mag 7 have already kind of pulled back off their all-time highs. But again, this one after hours will be important. And then one of my favorites here, Costco. Costco's chart, incredible, just continued grind higher. They also report earnings after the bell today.
Well, you and I have both contributed to that, no doubt. Real quick, Bitcoin and oil both up. Are we going to see that continue? Gold.
Gold, right. Yeah, so the weak dollar is a bonus for gold, because anything that when the dollar weakens, any commodity or currency like that is going to do well. The kicker for Bitcoin is simply the 69,000 level that we got rejected off of for that one quick flush. We're slowly grinding back. If it gets through that, it could go to 75 pretty darn quickly. So big level to watch there. And then same thing on gold. We've had many up days in a row. So part of me is saying, all right, as much of a gold bull as I am, the question is, at what point do you just have to have at least some sort of pullback before we go higher? So that's something to watch tomorrow. Does this big drop in the dollar cause a bounce tomorrow on this jobs data? Maybe it's stronger than expected. And then does that give the reason for gold to pull back just a little bit?
All right, Gareth, thank you so much. Always great to have you join us. And we have another incredible special guest today, Danielle DiMartino Booth, CEO and Chief Market Strategist for QI Research and the author of Fed Up, an insider's take on the willful ignorance and elitism at the Federal Reserve. Danielle, thank you so much for joining me today.
It's great to be here.
So great to have you. We got a lot to talk about, and we'll get to it quickly. Let's start with the markets, which hit a new all-time high today. Do you see further upside or downside in the markets ahead?
So I get the sensation that this is a market in a melt-up mode. And I see that this might be kind of what we call the blow-off top. You could easily see the S&P 500 cruise all the way up to 6,000 because it only took 12 weeks to get from 4,000 to 5,000. So when markets are kind of operating of their own volition, they're really not trading off of any news. You don't want to hear that small businesses are hiring and at the slowest pace in years, or that layoffs are running in February at the highest pace since 2009. As you said when you started out your segment, these are not fundamentally beneficial news on the economy, and yet here we are.
Exactly. Well, NVIDIA also hit new all-time highs today. So would you say that the AI stocks are a bubble like the .com stocks, or is there something real behind this?
Well, I think AI is very, very real. But I do think that, as was the case with, say, Cisco Systems in 2000, when it was having absolute blowout earnings, revenue growth, it was just off the rig. But again, that's when it hit its top, and it came down for years after that. So as Warren Buffett used to like to say, there's always a difference between a great company and a great stock. And I think that that's where we are. But again, there is momentum behind this NVIDIA trade. And that's why I think that you could certainly see it push higher for here. But again, not based on fundamentals.
I mentioned you wrote the book, Fed Up. What's your latest view on the Federal Reserve? Will they achieve the soft or no landing?
So I think that Chair Powell is going to continue to follow the inflation that he perceives to be sticky. Obviously, when companies are announcing the slowest wage gains in 3 years, you know that is going to come to a screeching halt. But again, I think the Fed chair is on a mission to be higher for longer, to continue to shrink the size of the Fed's balance sheet. So if we get yet another hotter than expected non-farm payroll report in the morning that disputes what corporate America has been telling us, with one layoff announcement after another, which was validated with this morning's Challenger data. Again, I think Fed chair is going to hide behind that data and say, you know what, maybe we're going to press forward and not have that first rate cut come until July.
Until July. Do you think we will actually see cuts? And what kind of an impact do you think that will have?
Well, I think at this point, if we're only going to be seeing, say, 1/4 percentage point rate cut, when what we saw on the upside was 3/4 percentage point at a time, I think that very small incremental cuts aren't going to have, they're really not going to push financial conditions to be any easier. That being said, financial conditions are about as easy as they possibly could be through the lens of the high yield bond market and the stock market. And that is definitely something that Chair Powell is taking into account when considering when to begin lowering interest rates.
Some economists say that we are in a recession now. Some say we are headed for one. What state would you say our economy is currently in, and where do you see it headed this year? It's an election year, too.
It is an election year, and we have seen this Bureau of Labor Statistics and this Bureau of Economic Analysis report data that is serially revised 1 month after another, 1 quarter after another. It wasn't until 2009 that we knew that the first quarter of 2008 was actually a negative GDP print. So I am in the camp that thinks that the United States currently is in recession. As for when that becomes a matter of public knowledge, that might have to wait until after the elections.
Exactly. So President Biden will give his State of the Union address tonight. How could what he says impact the markets? And do you think that could impact how things continue until November? I mean, could we see some big changes closer to November?
So I think that President Biden has largely exhausted his executive powers and his ability to try and pump cash into the economy. There's been some proposals about first-time home buyers and whether or not to give them a small incentive. But I really do think that if you're trying to choose between one or the other, that it was Chair Powell's trip up to the Hill today that's going to be much more important, at least at the financial markets.
Lastly, what do you make of gold hitting fresh highs and at the same time, Bitcoin surpassing its all-time high? Could Bitcoin start replacing gold in portfolios?
I really don't think so. I think that they're going up for quite different reasons. I think that gold is reflecting the recession that we actually are in, and that it is being viewed as its old traditional safe haven, and that's why we are seeing people flock to gold. And I think Bitcoin is a matter of liquidity really run wild. The ability to get into an exchange traded fund really has opened the floodgates, and you've seen this massive step up in people getting into Bitcoin. And one is acting like an extremely speculative asset, kind of like Nvidia, and the other is acting like the most defensive place that you could possibly put your money right now.
Danielle DiMartino Booth, thank you so much for your time and your insight. We truly appreciate it. We would love to have you back again in the future.
Thank you for having me today.
Thank you. Have a great rest of the day. And thank you for watching Trading the Close on this Thursday. We'll see you back here on Monday. Make it a great rest of the week.